The single best technical chart I've ever seen on any market, is the 10-year cup and handle formation that gold has made.
Because they're real and they have real. I mean, this is, I mean, goodness me, I mean, you're talking about biblical providence here. So, I mean, you can't argue it. And I think, well, you know what amazes me sometimes, Peter, is that I sometimes think, we deal with a lot of good clients all over the world, and I have some very good Indian friends from the continent India. And and you know what? What amazes me every time I visit it or see them is that if you suddenly realise the average Indian farmer who is cycling down a dusty road has so much gold, probably got kilos of gold for the most part through dowries, through literally thousands of years of. They never spend this gold. They use a coin maybe to trade, but they never spend this gold. And what amazes me, and I suddenly think, goodness me, what a kind of a tectonic shift when the average American owns, what, maybe an ounce, I don't even know, but probably an ounce of jewellery. And as you say, they're not really that, people just miss the whole point of gold. But just think if gold is revalued to an amount that is no longer paper-centric. We don't know what the price is, but it is probably a heck of a lot higher than now. And say if it was 3,000 or 4,000, I don't know. But I mean, basically, where does that put the average Indian farmer? It puts him in a position where he's more wealthy than the average American. And it's like, and appears to have nothing. It's an interesting dynamic.
Well, here in the U.S., and that's where I can only address Andrew, we could go into any financial institution and we will find not only does the average investor, or client of that firm, have little or no ownership of gold and silver, neither do the financial advisors. One of the reasons also is the average age of the financial advisor has been in the business less than 10 years. So they weren't even around during the last financial crisis, which was really a warm up for what's coming now. That was as bad as it was. And people are now comparing this inflation thing to, Volcker and all. I said, wait a second, don't compare that. And they go, why? In 1980, we were the world's largest credited nation. We didn't even know what $1 trillion deficit or debt was. Now we have 30 trillion in debt. And that doesn't count our Social Security and our Medicare and our Medicaid, which people are dependent on here and all. So everybody talks to me about interest rates going up and up and up. And I say, okay, they go back to 5%. 5% is not very high compared to what they once were, especially when I looked for my first home and I remember the lady saying, I think I can get you a 15% mortgage. But at 5% and $30 trillion, that's 1.5 trillion in interest expense the US has. Hey, Andy, our best year was 2019 during Trump's time. We took in 3.2 trillion, a little over that, closer to 3.3 trillion in revenue in the US. At that point, we would spend almost half of our total tax income just to pay the interest here in the United States. So I listened to all these guys and gals and young folks talking about how great America can be and all this other stuff and technology and stuff. And I go, wait a minute, we're not even going to be able to barely pay our interest, let alone military and all the other stuff. How do you plan on doing that? How's it going to happen? And so the gold and the reasons to own it just have multiplied. And one last thing I have to bring up that I don't want to miss in the interview. I provided it to your group, and if they show it, it's great. If not, people should learn it. The single best technical chart I've ever seen on any market, is the 10-year cup and handle formation that gold has made. And it is screaming of a target, as I provided in the chart, of at least $3,000 on gold. Wow. And so many more times cup and handles move to the upside, not downside. Forgetting all the other fundamental reasons to own gold, the single best technical bullish reason from a chart to own gold is before us. So like I said, it's hard to not want to own it, especially when most of the regular world is telling me, what are you, crazy? It's kryptonite. What do you want to own that for? And that's when my ears perk up and why I'm so personally exposed to and counting on capital appreciation and preservation of capital through the gold and silver market.
You know, and I looked the other, and I'm sure this is the same for the US or anywhere around the globe. We did a study. I think it was Money Week. Looked at it, and it was in the UK back in 1958. You could buy a house for 150 ounces of gold. Right now, in 2022, and I think the price of the house was £1,800. Now it's 275,000. Right now, you can buy the same house for 170 ounces of gold. And that's after 50 years of price suppression. Can you imagine what it would be if you were saying 3,000? Then it would be even less than that. So it'd probably be 50 ounces to buy that same house. So really, you know, when people say to me, oh, it's so volatile. No, it depends on, if you're trading a 10-minute chart, well, you shouldn't be anyway. I mean, to be honest, if you're moaning about it, clearly you're on the wrong side of it. But I mean, you know, if you're a stacker, well, then what can you do? As you say, you can't control what the price is. You just keep averaging. Take some of your disposable income, and it's about wealth protection. You said it yourself. It's all about wealth protection. It's not about making money. It's just about making sure the hole in the bucket isn't big.
I think anybody, if they truly understand economics, realizes now there will have to be a change in the world on money. You can't have this debt explosion everywhere and just think it's going to go away. It'll eventually have to be dealt with. Even if it's not for people that are latter years or have gray hair like, you know, we now have, Andy. Even if you're a lot younger, you're going to have to deal with it. And realistically, the central bankers, who are still going to be influential, whether they're deserving of it or not, I'm not going to argue about it, they're the ones that still have the influence. What have they continuously, aggressively purchased? Gold. For what reason then? Why do they continue doing it? Because they may know something and not share it publicly, but they privately know that in the end, this game will end. And if it's not on their tour, whoever tour will be, is going to need something of hardness, a true hard asset to change whatever has to come. And if you look at it, think about the two countries that have been the biggest buyers of gold, China and Russia. They are the ones that are likely going to be the cause and reason for this change in the world monetary system.
As you say, to them, it is like, to them, it's alchemy revisited. I mean, you know, you're taking a paper price and you're converting worthless money, fiat currencies, into something physical like that at this price. And everyone knows, and Russia and China have known for many years that the gold price is suppressed. So, you know, obviously, so what are you going to do? You look at the gold price and you say, well, I've got some spare dollars here, I've got some spare rubles. Well, of course, it will just purchase the physical and we'll take it off the market. And as you say, there comes a point at the margin, because it's at the margin, everything's so heavily leveraged, at the margin, you take those few ounces more out. It's like the straw that broke the camel's back. You take those few ounces out where this derivative pyramid is balancing on less and less and less, then the whole thing topples. And I think this whole sanction blowback and this commoditization of the ruble, we know for certain that that Russia is discounting oil 30%. You can pay for it in gold, so it means people are buying gold. And these are the same guys with Cayman accounts, JP Morgan's, all of these guys are all in on this trade. For sure they are. And they've hidden their Cayman accounts for multiple years. And of course, you know, so basically what they're doing is, even if it's not just them, globally, physical is being taken to buy cheap gold, oil, which is then sold back into the marketplace. Now, what's happening to this gold? It's being sold to China for rubles, and it's a win-win-win. This whole thing. But what's happening through this whole process? It's happening so quickly. It's not like we're just progressing along slowly along this unwind of paper to physical. Suddenly, like the nickel market, a wrench has been thrown in. And it's their own doing. They've thrown in ill-conceived sanctions that are really going to cause people to starve in certain countries. It's going to cause, it's going to cause a complete upset. and they've not seen that the gold and silver markets. I guess the Fed doesn't know anything about gold. Daniela Giamartino Booth said they know nothing about it. They never talk about it. Do they not realise what they've done? This throwback. This, if the gold and silver markets collapse, then the jig's up for the dollar completely.
I think what's interesting in his real latter stage of his life, the person that really kicked all this off, this printing of money without any real care and flooding the system, was Alan Greenspan. He's the father of the change of and making fiat currency a way of life. You know, Bernanke increased it because he was faced with a financial crisis, and he felt there was no other choice. But I find it interesting that both of them, particularly Greenspan, now only when it comes to gold, they only say things positive or they don't say anything at all. And it's interesting that once these guys are out of the central banks, even recently, Fed governors that left 2, 3, 4 years ago, who may have also been trading their personal accounts, like the guys that were caught, they all have become more favorable now towards the gold market. So I like I said, I think all things are indicated. And if the good Lord allows me and you to speak again in 12 months or maybe 24 months at best, we're going to see a much higher gold and silver price. I'm certainly have bet the ranch on that. And, you know, after 38 years being around this and learning how to lose money as much as make money, I think I made a pretty good bet.